Hello, everyone. My name is Jordan Walker. I am a pharmacist and small business owner in the state of Georgia. And I wanted to share a little bit tonight about how I invest in Bitcoin. This is part three of a series in how I invest in Bitcoin. Part one was talking about buying Bitcoin directly and holding it in cold storage, just the quintessential classic buying and holding of Bitcoin itself on the blockchain. You own the Bitcoin. Part two was talking about how I got into owning MicroStrategy stock, or now strategy, MSTR, and why I think that is a good investment right now, why I own more strategy exposure than I even plain Bitcoin. Tonight, though, I want to talk about the nuts and bolts of what I am doing with that strategy stock, what I am doing to generate income or yield. Now, the primary place that I'm doing this, let me give you a little bit of background in terms of how I got into investing in strategy, how I look at it, and what type of account I'm holding it in. The main account that I hold strategy stock, I of course invest in it personally and hold it on our personal investments and retirement funds and things like that. But where I got my start with this was as a small portion of our business treasury strategy. And again, we're a small business. We're not talking millions of dollars here. This is just the cash that we have in the bank available to use for business purchases. It's so that we can make payroll. It's so that we can purchase inventory. It's so that we can pay expenses and have unexpected capital purchases come up when we have to upgrade equipment. But we need to hold, I like to hold a good bit in cash reserves so that I don't have to go hit a line of credit or so that I don't have to use up a credit card and carry a balance. I like to hold enough cash reserves to feel comfortable. And so we've been diligent about saving and setting aside retained earnings and having money that's in the bank available to use. When that money gets to a certain point, I got sick of seeing it sit there and not make anything. It finally got to the point where it was enough where I was doing the math on what, even holding at the time, CDs were yielding less than 2%. But I was looking at it saying, well, at least I could get 2% because the checking account is not paying me anything. And so I opened up a cash management brokerage account online. I'm a DIY type person. I like to do it myself. I didn't want to have to pick up the phone and call someone or email someone every time I wanted to buy a treasury bill or a CD or invest in an ETF fund. I like to do all of that myself. So I opened up an account on Merrill Edge, and now we manage some of our company's cash in a cash management account. And we invest it and try to generate yield. We've been doing that now for about 3 years. For the first couple of years, fortunately, this was all after COVID. This was after the rate hikes, and we have been able to generate between 4 and 5% on money market funds, T-bills, short-term CDs, very safe investments, and generate 4 to 5% yield. And I thought that's all I wanted to do with it. I'm just trying to generate a little something. Over time, that evolved and developed into the point where I decided that we need to go out the risk curve a little bit and give ourselves some exposure so that we are not getting eaten alive by inflation. Now, the CPI number generally is trailing that 4 or 5%, especially now as it dips even further. But if you look at what we expect if you look in the macroeconomic community, I'm a Bitcoin believer. I see money printing as being a much higher percentage than the CPI. I view real inflation, the debasement of the currency, being higher than that. And so I began to feel that, essentially that 4 to 5% yield is, of course, not a 4 to 5% real yield. And in actuality, it may actually be negative in many ways over the long term. And so I was like, we need to get out the yield curve a little bit. We need to own things with this money, at least part of this money, to where we are not at such great risk of long-term monetary debasement as we try to run a solid business. So that got me into thinking, okay, I want to hold Bitcoin on the balance sheet. This was end of last year. You hear about companies like Strategy, and as I researched that more and more, you hear about other companies starting to hold Bitcoin as a capital asset with some of their company's money. So they have some retained earnings, they have cash on their balance sheet instead of letting it sit there in maybe not a checking account, but money market funds, T-bills, CDs. Instead of letting it sit there in these short-term low yielding instruments, let's hold something in a hard form of money. Now, what I did with some of that money was I invested in gold. So we have a little piece of that in gold ETF. Now, there's a lot of people that would probably grill me on that, saying, "Well, you got to hold the physical metal." And there's a lot of people who would say I'd be better off just holding the actual Bitcoin and not trying to hold strategy stock or do any of these things I'm talking about now. But what I'm trying to do with this, this is an active cash management business account. This is something I'm trying to not only invest well and generate smaller yields, but I'm trying to invest well for long-term capital appreciation, which is how I got into MSTR. And I think that they offer asymmetric upside even over and above Bitcoin itself at the current time. But I also wanted to continue to use this account to generate even higher yield. So over time, we had started to invest in higher yielding things like junk bond funds or master limited partnerships, which are like oil and gas pipeline companies like Energy Transfer. You can look up a ticker symbol ET. The ETF that we use for that is ticker symbol AMLP, and started to get up above 6% yield. But even that, I did not think was far enough out the risk curve for a small portion of this portfolio. And I thought we could take more risk. And so I wanted to buy Bitcoin. I went over this in a previous video, but I was not able in the Merrill Edge platform. They did not allow buying of the Bitcoin ETF. At that time, I didn't want to buy actual Bitcoin through an exchange and try to hold it in cold storage for the business account. I didn't want to set all that up at the time. And so I decided to buy MSTR stock, a small amount of it, and hold it in the portfolio for the business. In doing that, I began to realize what Michael Saylor said is really true. As I began to track MSTR stock, learn more about it, learn more about what they're doing, and listen to more and more of Michael Saylor as part of my due diligence on holding a position in that stock, I began to see that his statement that volatility is vitality is very true. Not only is volatility vitality, volatility is very valuable to a lot of people. When you hear Saylor talk about the options market and how hot the MicroStrategy options market is, it's really true. And that's because of the stock's extreme volatility, its extreme ability to go up and down wildly. And that's because there's a major disagreement on what Bitcoin and by extension MicroStrategy is worth. There are some people who think it is absolutely worthless. There are some people who think it is worth 10 to 100x what it is today. And so that's what causes volatility, a lot of disagreement in free trade. So what that showed me was that you can capture yield by selling that volatility, by selling some of your upside. And that's the way that we decided to start to utilize our MSTR holdings. Because first, let me start with the basic foundational idea that I am long MSTR. I am long MicroStrategy. I am a believer in it. I am invested in it for the long term. I do not plan to sell like recently when we had a pretty substantial drawdown from mid 300s down to low 200s. I didn't sell any of it. I actually ended up buying more. Now, if it draws down more than that, that could test my metal even more. But suffice it to say, I have very high conviction for my MSTR holdings. I'm very comfortable with the size it is in my portfolio. I don't plan to sell it. So what can I do with it as it sits there, because strategy doesn't pay a dividend? So you might be asking, how can you possibly generate a yield? How can you generate income if it doesn't pay a dividend? Well, you can do what's called the covered call strategy, or selling covered calls. A covered call is when you own underlying shares of a stock and you sell a contract called a call option to someone else, giving them the right to buy your shares of that stock at a predetermined price at or before an expiration date. So I know that probably sounds complicated, but let's try to visualize it here. That's why I've got a screen share on tonight. I'm going to search MSTR for strategy stock. This is Strategy Incorporated, just on regular Yahoo Finance. At the end of trading on Friday, it closed at $394.37. So for tonight, I might say $395. I might say $400. That's about where it is in terms of its spot price. But you can go on any financial website, any stock website or brokerage website, and you can go and look at the options chart or the options chain. You get into the options, you're going to see that it's really divided into dates. These are expiration dates for these options. And we are going to be looking at calls, but this also would include things called puts, which is a different kind of option that I'm not really going to get into tonight. We're just talking about a call option. And a call option is when someone sells the right to buy a given stock at a specific price at or before an expiration date. A covered call is the most conservative option strategy there is. It is not a leveraged play. It does not involve debt. What it involves is you holding an underlying stock in your portfolio. And then on those shares of the stock, you are going to essentially sell part of your upside if you're selling out of the money like I do. So I own this stock. Let's just paint a visual here. Let's say that I'm going to sell it out a month from now. So today is May 4th. I'm going to go out, well, let's say 4 weeks. So May 9th would be closing at the end of this upcoming trading week. That would be the following week, 3 weeks. So this is 4 weeks out, or approximately a month. Let's look at May 30th. So if we scroll all the way down, these are right here is the strike price. This is the price that the contract is allowing the owner of the call option to purchase the share at. So these are all in blue. These are, as we scroll down, they're all below the current market price, which means they are in the money. At the money is the option that's right directly at, so you can see where it changes from blue to white. At the money is the current stock price in the market. Anything above that is called out of the money. What I like to do is sell covered call options out of the money, meaning they are above what the current market price is. And my hope in that is that they expire worthless. How do they expire worthless? Well, as long as the price of strategy stays or ends up below wherever, let's say I sell one at $430. If the price of strategy doesn't go above $430 during the next 4 weeks, then this option will expire worthless. And I get to keep the premium that I sold it for. And that's it. The option's not worth anything. So I generated a cash income by selling an option. Now, what happens if the stock price during that 4 week period goes up to $600? Well, I've missed out on that upside because I've sold it at $430 and I have to sell those shares for $430 to the person who owns that call option. So that's what they were buying. They were buying upside. I was selling upside. So you might be thinking, well, why would you sell upside if you're such a big believer in Bitcoin and strategy? Well, it's because of this. Where I'm holding these stocks is in my cash management account for my small business. And so I'm okay capping my upside a little bit to generate guaranteed yield and to help to produce income for my business. I'm okay selling the astronomical upside that could happen in a short period of time. Now, let's talk a little about risks and trade-offs. The main risk that you have in selling a covered call option, in my view, is you have the underlying asset, and your main risk is still just owning the underlying asset. So if strategy were to tank and go down to $200 or $150 or $100, I'll still hold that stock, and I am seeing a vast drawdown in the value of my underlying stock. It didn't affect the premium that I got for the call option. In fact, the call option, I get to keep that premium since it's not going above what I sold it for. But that's the primary risk. The primary risk of a covered call option is your exposure to the underlying asset. The second major risk or trade-off, it's not so much a risk as a trade-off, is you are selling your upside beyond the strike price. So you need to be very careful about what strike price you're choosing, what expiration date you're choosing, because you have to have a core belief that the majority of these are going to expire worthless, because you don't want to constantly be giving up upside for pennies on the dollar. So what I generally do is I looked at strategy and I look back over the years and see, even though it is extremely volatile and it has these huge moves, I look back and I said, okay, what does it move in a 2 to 3 week period or a 2 to 4 week period. And I try to extend and sell out of the money calls for an amount that I don't think it's going to go to based on its historical trading ranges. Okay, that I could be wrong. A lot of people believe that at any given time, Bitcoin could explode. Bitcoin could go from 95,000 to 175,000 a coin to 250,000 a coin to a million a coin. You never know what's going to happen in today's macroeconomic uncertainty and Bitcoin trying to capture market share for being the monetary system of the future. You never know. And if that happens, strategy could very well, get on a rocket ship and leave me in the dust with my little call options that I'm selling. That's why I don't sell covered call options on all of our underlying holdings. So I'm only selling call options that would force me to sell somewhere between 20 and 40% of those holdings. So that helps keep me a little bit with more exposure on the long end with those shares that are not at risk. Now, what I generally do is I will look at it and I will go and look at about 25% over the current market price. So let's say the current market price is $3.95. 25% above that would be about $4.95. So if I'm coming down here to $4.95, I can sell that. You can see the last sale price was $5.19. So to explain how that works, you have to buy and sell in groups of 100 shares. So that $5.19 is just the option for one share. But when you do one option, it's going to be 100 shares. So you have to multiply that by 100. So 519 times 100 is $519. So let's say I hold at $395 per share. I hold 100 shares, meaning I hold $39,500 worth of strategy stock. And I decide that I'm going to sell a call option for 4 weeks out at 25% above that price for $4.95. So that means worst case scenario, if I'm not planning to sell my MSTR, even if it goes way down, then the worst case scenario for me on this particular call option would be if the price went way beyond $4.95. But what I have done is I've said, would I be okay with a 25% gain in my stock over the next 4 weeks? And you got to think, if you got a 25% gain in 4 weeks and multiplied that out by, let's just say 12 to make the math easy, that's a annualized 300% gain. Now, yes, did you miss out on some? Yes, but you got a 25% gain in the course of 4 weeks. So you can't really cry about that, especially not in a small business account like I'm talking about managing. We can certainly make do with those kinds of gains. So that would be the worst case scenario. If it went way up above $4.95 and I missed out on some of that upside and had to sell my shares for $495. Anything short of that, if the stock goes down, if the stock stays at $3.95, if the stock goes to $485, that option is going to expire worthless on the expiration date. And so what's ultimately going to happen is I'm going to generate income off of that. So far, through a quarter, through 3 months, I have not had any shares called away by utilizing this strategy. That doesn't mean that it won't happen next week or the following month. But so far, I have not had any called away. And maybe in a future episode, I'll get into how I look at what I would do if that did happen and how I would continue to stay long strategy and gain exposure back to that. But for now, let's just talk about the types of yields that I'm able to generate. Because MSTR is so volatile and goes up and down so much, these premiums are extremely high. So again, you can sell for $519, you can sell a covered call option 4 weeks out, 25% above the current market price of MSTR. Now, $519, if you did that every month and it never got called away, I know those are big ifs, but if you were able to repeat that strategy for 12 months, you would generate $6,228 of yield or income, premiums that are being paid to you in cash. $6,228 is what you could generate by selling those over the course of a year. So let's think about that in terms of what type of yield is that. So do 6,228 divided by 39,500, which is the cost basis or your current market price value of your MSTR 100 shares. And that is over 15%. So you can generate a 15% yield. Where else can you get a 15% yield in basic instruments? You just can't. Where else can you generate a 15% yield by selling anything over a 25% 1 month upside on a stock? You can't. There's just nothing out there that does this in the market. There's nothing that has that type of volatility that people are looking for and that type of disagreement on what the value of the underlying asset is. And so that's what I'm doing. I think that so far it's been fun. Now, is this something that I have to sit here at a computer like some day trader looking at all day, every day? No, I do look at it pretty regularly throughout the day just because it does interest me. But I could do this selling 1 to 4 week call options. So I could do this weekly. I could do this every 2 weeks. I could do this every 3 weeks, every 4 weeks. And it would probably take me less than 15 minutes a week. I mean, this is not something, once you kind of understand how your brokerage account works, how the option chain works, and you can go and find what you're looking for pretty quickly, you can do it very quickly. Now, what are some of the things that might be prohibitive or prevent you from doing this? One is it does take time and learning how to do it. You're going to have to learn and get more comfortable with what an option contract is, how they work on your individual brokerage website, and also what the risks and rewards are. So some of what we've talked about here, but you can research that yourself. The other thing that might be a constraint for some people in some certain size accounts is if you can't afford to hold 100 shares. Okay, like we said, that's almost $40,000 today to hold 100 shares. If you're not comfortable with that being a holding in your portfolio, then it's not going to make sense for you to individually sell covered calls. In that case, there is something you should check out. It's basically an ETF that does a kind of proxy version of this within the ETF and kicks out extreme dividends, monthly payments to you. It's ticker symbol MSTY, Misty. It is a yield max ETF, and what they do is a very similar strategy to what I've just been discussing, basically selling some of the upside. So they're going to appreciate not as much as MSTR during a bull market, but they're going to be paying out dividends. And it's an easier entry point if you can't afford to hold the underlying asset, or if you just don't want the hassle of having to do the covered calls yourself. There are some advantages to doing it yourself versus Misty, just because of the dynamics for how they have to do it. They don't hold underlying MSTR stock in very heavy positions. They do it with option spreads, which are, honestly a little above my head, and I didn't want to get into learning all of that. I'm perfectly comfortable with my simple covered call strategy that I'm able to do in my online brokerage account, and I do it every week. So far, I'll share with you the results from doing this for about a quarter. Been doing it for about 4 months now, but I went back and looked at the first 3 months that I did it, and essentially I generated about a 5% yield on my underlying holdings at the cost. And that's using the original cost basis of what I paid to get into those MSTR positions. Generated 5% over a quarter. So that annualizes out to over 20% if I'm able to keep that up. That does not include the appreciation of the stock. So that is just yield that I am generating by selling out of the money covered calls on my MSTR positions. And so that's the third way that I am investing in and utilizing Bitcoin to generate income and generate yield for my small business. So covered call option. Look into it. Look at why doing it with MSTR shares, especially, well, really only if you are comfortable holding MSTR shares. Again, the number one rule here is that if you're going to do this, you have to be comfortable with holding the underlying stocks and watching them go up and down as you stay the course, sell your covered call options. You also have to have a plan of what you're going to do if the shares are going to be called away, or if you want to try to get out of that option, there's a way to do that. So you sell the covered call to open it, and that's when you get that premium. That premium is really not yours to keep. You have kind of you're carrying a negative balance usually on your brokerage account for holding that call option until you close it. You can close it before the expiration date by by buying it. So you can buy it back at hopefully a cheaper price and close it out. I've actually closed out all but two of my call options before. So I'm using the momentum. If the price is really tanking on MSTR and that call option's value is tanking along with it, then I might buy it back very cheap, close it out, and go ahead and hold that money to the side to redeploy when it goes back up. There's all kinds of ways to play that game, and you can kind of play around with it and see what works for you. But even though I'm calling it a game and I'm calling it playing, it is generating very significant income for my small business. And if you're in a business or an industry like I am, where it's tough, pharmacy is a tough business, a very low margin business. You're trying to figure out everything you can to be a responsible steward for the resources, the money, the assets that your business has. And part of that for us has been looking at the cash that we're carrying from month to month and figuring out how can we make this cash work for us. And so I hope this explanation was helpful to some of you. I am not an options trader. I am not a derivatives expert. I am a normal dude that believes in Bitcoin, believes in strategy, and owns MicroStrategy stock and plans to hold it long term. And I am following pretty simple steps to generate some yield by trading off and selling some of my upside. So hope you guys have a good night. Leave a comment, like and subscribe, and engage with me in the comments. I'd love to talk about it. Have a good night.